This is Dave, and today's big hairy idea is using your credit cards to increase your credit rating. The last few days we've been talking about this conversation that Dylan and Amber have with Amber's credit card company in the cash machine. When Dylan has Amber call up her credit card company, and Dylan makes request after request after request of the credit card company. Now, Amber at first thinks these requests are kind of silly and doesn't think that they'd agree to them, but is surprised little by little that they keep agreeing. For instance, he asked the credit card company to lower her interest rates, and she's like, well, you can't just call up the company and ask that. And lo and behold, she finds out that you can, and her interest rate gets lowered tremendously. And he asks to enroll her into her rewards balance and the rewards program. She gets into that. But then he asks for something that surprises her. He asks to increase her credit limit. And she's like, why would you possibly want that? Because aren't you trying to tell me to get rid of my credit card debt? That this is money I shouldn't be owing? That I shouldn't be using my credit card so much? And he says, yes, but you have to understand I'm not giving you a higher credit card ceiling in order for you to spend it. In fact, that's my condition. If you're going to spend this money, if you think it's your money to spend, then I'm not going to ask for this at all. Can I count on you not to actually spend the money that you're given in a higher credit limit? And she says, okay, I'll agree to that, but why do I want to have a higher credit limit if I can't use it? That makes no sense to me. And he says, it's not for your spending ability at all. It's for your credit rating. It's okay, so what is a credit rating? Many of you might not be familiar with the idea. Credit rating is a scale from 300 all the way up to 850. And this is a number that each of us has attached to our credit file. If you look at Equifax or one of their competitors, you can look up your credit rating, and it takes into account lots of different details. It's going to track every loan you've had, every credit card you have. How much do you owe on each one? Have you missed any payments? Have you paid the balances off in full each month? It looks at a whole bunch of different factors. And that rating is very important, especially if you're ever looking to borrow money. So say you want to take out a mortgage, you want to buy a home, and you want to get a mortgage on it. Well, if you have a credit rating of 400, which is really low, the bank likely will either not lend you money at all, or if they do, charge you super high interest. But if you have a credit card rating of 800, which is fantastic, they're almost always going to say, yes, we're glad they're going to lend you money. We know you always pay your debts off on time. And we'll probably give you a really amazing competitive interest rate because we don't want you going to the next bank because they're also going to want to lend you money. Everyone's going to want to lend you money. So we're going to compete to give you the best deal possible. So your credit rating is a really important thing to have when trying to buy a home, even when getting credit cards. It comes into a whole variety of different factors, different areas where your credit rating is useful. And one of the factors they look at is how much of your available balance are you spending. So let's take a scenario where somebody has a total ceiling, a total credit line on a credit card of $20,000, and they owe $19,000. Now it's irrelevant right now whether they pay that off in full each month, and they just keep racking up $19,000 in spend. Say they're like my business, they have to buy a lot of supplies every month, so they rack up $19,000. Or if they owe a balance from month to month, either way, if they have $19,000 out of those $20,000 of their credit line used up, the banks are going to look at that and say, you know what? You're one emergency away from a catastrophe. Let's say everything's going fine. Every month you've had this $19,000 balance. You're managing it just fine month after month after month. Then all of a sudden you get into a car wreck. And suddenly you need to go to the repair shop. And you owe $4,000 to get your car back roadworthy. Well, you only have $1,000 that you can borrow. Suddenly you're $3,000 in the hole. You're in a crisis. Maybe you're going to default on your bills. So new lenders might be very wary of the fact that you owe 95% of your available limit. But with one phone call, you can fix that. You call up your credit card company and you say, can you increase my credit line? And they do their little typing thing and they go into the machine and they say, oh, it looks like you've made every single payment on time for the past 5 years. We can therefore give you an increase from $20,000 to $50,000. Now, don't go spend that money. If you do, you're just going to get yourself further into the hole. But if now you keep that same $19,000 balance month to month, but it's $19,000 out of $50,000, then you're only using 38% of your available balance rather than 95%. Now, if you got into a car accident, don't go looking for one, but if you got into a car accident or had some other emergency and you owed $4,000, okay, so you put $4,000 on the card. You're up from using 38% of your balance to 46% of your balance, still very much in the safe zone. And the banks don't consider you to be a major risk. So if you want to increase your credit rating, one easy step is just to ask for a higher credit ceiling, a higher credit line on your existing cards. Now, as we talked about a few days ago, it's good to get multiple cards in different categories. While that is good across the board and eventually will help you use a smaller percentage of your overall available credit, short term, that can actually be a negative factor for your credit rating. Because if they see you signing up for a whole bunch of new cards, they're kind of wondering what's going on with them. Is this guy suddenly getting into a money crisis that he needs to be borrowing, $5,000 on this card, $6,000 on this card, $8,000 on that card? Why is he getting so much more credit on different cards? So that's a minor negative factor in the credit ratings if you get a bunch of new cards. But it's not a big factor, so don't worry about it. And don't try to increase your overall credit ceiling that way initially. But there is no downside on calling up the credit card companies and asking for a higher ceiling on an existing card, because it doesn't register as a new card, which is the negative factor, and it does register as a higher ceiling, so it helps you improve your credit rating, get it close to that 850 ideal number, which means that you can just borrow the money you need when you need it at a really reasonable price, which is an amazing thing to have.